Hello and good evening everybody, and welcome back once again for another video of DIY investing. With the last few updates covering many details around altcoins, today is a great opportunity for me to dive in and share with you guys my cyclical analysis regarding Bitcoin. Now, Bitcoin behaves in these market cycles that are very expansive and impulsive, but each cycle differs just a little bit from the last one. And so today I'm going to be diving in. I'm going to be sharing with you guys my overall thoughts and perspectives with Bitcoin, both in the short term, the midterm, as well as the long term, what we could expect maybe in 5 to 10 years from now. And so these are all things that I've been thinking about a lot. How is this bull market going to differ between the last few bull markets? Because there have been a lot of striking similarities between all of them. The only real difference is the time frames in between. One of the best things you're going to be able to do when you're investing into cryptocurrency is fully understand exactly what's going to happen inside of Bitcoin's market, because Bitcoin is the biggest driver of value inside of this market. If we know what Bitcoin's going to do both on a short-term, mid-term, and a long-term time frame, we're going to be able to fully understand and appreciate what we can do with our investments and how we can strategize in the way to make the most profitability for our portfolios. If you're new and just finding this channel, make sure you hit that subscribe button and click the notification bell so that you don't miss any more updates like the one provided for you here. Remember guys, there's just under 2 weeks left to pick up my course and signals at a 50% discount, so make sure that you guys jump on that while the opportunity is still there. You can message me inside of my Discord server by clicking the invitation link in the description of this video. You can get a hold of me through email. Once again, that's going to be in the description of this video, or you can drop a comment here on YouTube. One of the 3 ways. I have a number of different social media handles that you can find in the description, and so you guys just need to reach out to me on there, and there you're going to be able to find a 50% discount. So jump on that now. We're going to be continuing to do this sale until the 1st of January or the new year, and once the new year is passed, prices are going to double. With all that being said guys, thank you so much for the support. It really does mean a lot. The channel's been growing so exponentially fast recently, and it just makes me super happy and excited to be able to do all of these things for you. I mean, it's really crazy to see how quick it's actually grown, and the thing about it is it only continues to get quicker and quicker. So I'm excited to have you guys a part of this team. The Discord's growing very quickly, and it's just exciting overall that we're all here together right at the very start of this bull run before we all make life-changing gains together. It's going to be a great thing to have happen to us, and I know that I've already experienced it with the last bull run, and that's why I made this channel, was to help you guys that maybe haven't quite yet, to be able to get some sound advice and see kind of what I would personally be doing, somebody that's traded the older cycles, and so that you guys can make sure that you're profiting alongside next to us. It's going to be a really exciting time, and I'm super thankful to have you guys a part of the team. With all that being said, let's jump right in the video today. Alright, so here we are taking a look at the Brave New Coin Liquid Index for Bitcoin. This is the all-time graph of Bitcoin on a linear scale. Now, I used to make videos talking about this scale quite often, and I haven't for a while, so I figured now would be a good opportunity for me to kind of share my overall Bitcoin expectations, and not only just expectations, but just my outlook for the short term, the midterm, and the long-term future of Bitcoin. Because at the end of the day, remember what I said at the first of the video, Bitcoin is the driver of the Bitcoin is the driver of value inside of the crypto market, and so it's important that we understand exactly what's happening with Bitcoin so that we can fully understand what may happen with the rest of the market in the future. Now, by taking a look here, we can see that we have this linear growth curve, and we can see that every parabolic run is comprised on this little trend. Now, we're going to talk about a couple different things today for this video, but overall, I just wanted to kind of analyze how the time frames work, what the parabolic runs look like, and then what we could potentially see about 4, 5, 10 years down the line, somewhere around that time frame, because I think it's really important, since we are all here at a very early stage, or what I would view a very early stage of the crypto market. I mean, a lot of you guys that maybe didn't get in until the very top of 2018 or somewhere in 2017 before the bear market started, or maybe you even got in somewhere in the bear market, a lot of you guys really haven't had the opportunity to trade some of the earlier cycles inside of Bitcoin. And so for that, I wanted to talk to you about these things, because you guys might be sitting there wondering, you know what, Bitcoin's so expensive right now, it's just under 10 grand. I mean, did I get in too late? Is this already about to start going back down and have a multi-year bear market? Or is this still early? And it's kind of hard to tell, because this is just a speculative market at the end of the day. Nobody really knows. We all have our own opinions and beliefs as far as where we're at in the cycle. But if it's from my own personal opinion and belief, I think that we're still very young in this market cycle, and we still have a lot of upward movement to go. And I'm actually going to dive into a chart towards the end of this video that's going to briefly explain. It's a chart that I've actually talked about in a previous video not too long ago, maybe 3 weeks ago. And it's one that is what I've personally been watching for a while now, just because I think that Bitcoin follows this specific chart closer than any other one that we have. It's really the best indicator that I think you can use for a long-term investment strategy inside of Bitcoin, because it follows the price of Bitcoin to a 95% accuracy, and it has done so far. Maybe you guys know exactly what I'm talking about, considering I did just make the video about it, but either way, we'll dive into that a little bit later. Now, to start off this video, we're going to be taking a look at the overall trend of Bitcoin and kind of how the cycles have played out in times past. Now, what I wanted to share with you guys is how the trend works. Now, what I've noticed inside of Bitcoin is we have these parabolic runs, and what I've noticed in these parabolic runs is the fact that the degree of trend between each run gets less and less significant. So what I mean by that is the parabolic nature gets less parabolic, and then the time in which it takes to develop a parabolic move actually gets longer. And we can see that happening right now. We can see that the first cycle was very, very parabolic. We basically went straight up from 5 cents to $32. It had very little pullbacks. And then we can see that we went from $2 to about 1,200 or 1,150, somewhere right around there. And we can see that the parabolic nature was still very, very steep, but this linear trend wasn't quite as parabolic as the first cycle. This one was more straight up. This one was a little bit less. And then we can see that we went from a bottom of about $200, peaked at about 20K, and this trend was a lot longer. It took a lot more accumulation before we ended up getting that big parabolic run. I mean, from the top of the last cycle to the point in which we broke out of that previous all-time high was about 3 years. So this was a lot longer of a trend. And that's kind of the way that the cycles are working out. The parabolic runs are getting less significant. The time in which it takes each parabolic run to happen gets longer. And that's a pattern that's played out 3 different times. We can see that this one went straight up. This one was also very parabolic, but it was a little bit less steep than the first one. And then we can see that the most recent cycle that we had took a lot longer to accumulate. And we had this long trend line at the very base of this cycle that accumulated for almost a year's time frame. It was a very long trend, and it took a while to build up that momentum. Now, there's a couple reasons why I believe this is the case. Rule number one, I mean, with any upcoming asset, there was not a very much amount of money in this early day cycles. And so it took less amount of money to create bigger price swings. And so for that, the price basically went straight up. On top of that, you really didn't have hardly any sell pressure inside of Bitcoin back in the day. And I think that's why it basically just went straight up parabolic. Now, the reason for that is because we had early day miners that were just kind of hodling Bitcoin. Not only that, but the original people that were buying Bitcoin really weren't doing a whole lot of selling. They were kind of buying it and just kind of holding on to that. And I think that's why we saw such a big parabolic run. Now, the parabolic runs are continuing to play out. But the thing about it, guys, is each parabolic run, the time in which it takes to develop the run gets longer, and the percent return actually ends up decreasing with each cycle. So we can see here the first parabolic run was about 65,000%, and it was a very big parabolic run, and it lasted about a year, just under a year time frame, about 329 days. And then we had our bear market, and then we started our next parabolic run here. And we can see that this one lasted about double, about 742 days, with an average return of about 53,000%. So we can see here that the time almost doubled. It took about double the same amount of time to reach even just shorter ROI. We didn't get the same ROI between the first cycle as the second cycle, even though they were very close and this cycle was extremely parabolic. It was still less of percent return had you bought the bottom of Bitcoin at 5 cents and sold the very top. Now, obviously, not very many people have done that, and I don't think anybody really did it. The people that make the most money on Bitcoin are the hodlers, the long-term investors. But we can see here that the trend is playing out as I've explained thus far. Now, let's take it back to this cycle here. We can see that this cycle lasted a little bit longer. This one was about 833 days. So about 100 days, just under 100 days longer than the second cycle. But we can see that the percent return dropped off significantly. We went from 65,000% increase to 53,000% increase to 9,000% 5% increase. So this was a very big drop off in ROI. And the reason for that is Bitcoin got very expensive. I mean, Bitcoin went from about $200 to 20K. And so that's the way that the law of diminishing returns work. And that's something that I've wanted to talk to you guys about. And it's something that I think we should all be considering, even with our altcoin portfolios as well. Now, a lot of people have very, very high price targets drawn for these altcoins, just based off of how parabolic the original first cycle was. And while that's still very possible that we can have these massive parabolic runs and these big moves like we saw in times past, one thing to keep a note of is the fact that as an asset gets more expensive and as we develop longer in the market cycle, the ROI on average from each cycle is going to diminish because the asset actually gets more expensive. And so this is something that I've been watching out for with Bitcoin, and it's something that I've actually strategized going towards my altcoin portfolios and exactly how I'm actually timing when I'm going to be taking profits, because it's important to note that. I mean, just because one cycle went super parabolic doesn't mean the next cycle has to go quite the same. In fact, it can look like it went the same nature as far as a parabolic move, but the percent return on investment is going to be much smaller. And so if you're somebody that's basing your targets off of a percent return rather than taking a look at all of these little factors like time frames and overall how much a asset actually has to go up in value to hit that percent return, you're going to get wrecked in the market, generally speaking, because it's not the most solid basing to base your understanding off of. Now, this takes us to the current cycle that we have inside of Bitcoin, and we can see here that based off of the first three cycles, the parabolic run is getting less significant, the duration of time is getting longer, and the ROI from each cycle is decreasing. Now, this has happened 3 different times, and this is really a no-brainer that it's going to play out once again. It only makes sense, in my opinion, that it's going to continue to play out like this. Now, with the last cycle, we had about 830 days approximately. That was about our time frame for the last cycle, from the bottom of capitulation to the top of the bull cycle. And so this is actually going to take us to our current cycle here. Now, we bottomed here at about $3,200. And if this pattern continues to play out, we're going to expect that this cycle is longer than the last one. So if the last one was 830 days, I think that it's possible we could see about a 1,000-day cycle. Now, my personal price target for the top of this next cycle is 200K. And so I think that we could see something along the lines of this. I think that we'll see roughly a similar linear growth cycle, meaning the parabolic run won't be quite as significant as the last 3. We'll have longer durations of corrections, and we will have less sizable impulses. But I think that overall, if you drop it out of the log scale, it's still going to be a very impulsive time, and the market's going to go very parabolic, and it'll look no different than the last cycles. But it's on the log scale that I'm watching. And so on the log scale, it's going to show a lot more of an accumulation. We're going to ride this trend, and it's not going to be quite as parabolic. Now, we can see here that in the first cycles, we had prices just basically skyrocket, go straight up with tiny little pullbacks, and then they're just completely going up the entire time. And even same with this cycle. We have these massive parabolic runs. They retrace a little bit, parabolic run, retrace, but overall price is just going straight up. Now with the last cycle was a little bit different because we had a lot longer of these accumulation retraces, and we actually had a lot more the whole way up than the last cycles. We had a lot more of these little sell-offs. And so I expect this cycle to play out pretty similarly. I mean, with the first cycle that we just had, I mean, we went from about $3,200 to 14K, and so that was a very impulsive move. But all of the choppiness on the way back down is very uncharacteristic of previous cycles. And that's why I think that this cycle is already starting to difference itself from the previous ones. We can see that we had a very parabolic run, and if we drop it out of the log scale, you guys will be able to see that. I mean, we went from $3,200 to 14K, all in one move. And so the parabolic nature was still there, but the retrace that we've been experiencing from that point has been very uncharacteristic from previous cycles. Now, it does follow similarly to that first little breakout that we had back in 2016. But the real difference is the fact that this was a much bigger impulse. And so it's a little bit different in that way. But I think that this is going to continue to play out. And we could see something along the lines of this. Maybe we see a very slow accumulation, and we really just kind of hug this trend line, and we make sizable impulses, but we have a lot longer corrections in the bear cycles. And I think that's something that could play out. Now, I don't know exactly how long this cycle is going to play out. I told you guys roughly 1,000 days. Now, I think a 4-year cycle would put us at about, let's see, how many years is 1,400 days? So roughly 4 years. So just under 4 years would be 1,400 days. And so a lot of top analysts that I've seen, a lot of people that I've actually paid courses for and bought their courses, they actually were predicting about a 4-year bear or 4-year bull cycle, which would take us to about here. So we could see something along the lines of this, right? Now a lot of these analysts, they actually predicted this 4-year bull cycle. Now it could very easily happen, and I'm not going to write that off, but I don't necessarily know. And my reason for that is because of the Bitcoin halvenings. I think that up to this point we followed a pretty correlated trend as far as how the Bitcoin halvenings work and how price reacts to them. And so I think that we're going to kind of stick to the same trend that we've been playing out. And I'm actually going to share with you guys a chart here in a little bit that's going to further explain my reasonings for that. Now, a lot of analysts are predicting a 4-year bull cycle because generally speaking, the more money that comes into an asset, the longer that the cycles happen, and it would make sense. But I don't necessarily think that we're going to be 600 days longer than the last cycle. It seems a little bit less realistic to me. And so for me personally, I'm targeting more of this 1,000-day threshold. I think that 1,000 days is a pretty solid time frame because that's going to put us roughly on that same sort of trend that we have been at. And I would say the longest would probably be about 1,200 days, which would be about 3 years. I'm predicting either a 1,000-day cycle or a 1,200-day cycle, and that seems a little bit more realistic to me. If you're looking for a little bit of a longer cycle, I think that 1,200 mark is going to be pretty correlated to how this cycle could play out based off of previous ones. But we don't really know at the end of the day. And that's why I have price targets in which I'm going to be taking profits and selling my assets, because we don't really have any sort of idea what could potentially happen. We're really just here to kind of go through the cycles and weather the storm. And it's really our trading plans that we develop now that are going to dictate whether we're going to be profitable by the end of this current cycle that we've just started. And so this is something I wanted to share with you guys, just some basic cyclical analysis inside of Bitcoin on the log scale. Now let's actually dive in and take a look at a chart that I think is very important that we should be watching for. Now, if you guys do not know, this is the Bitcoin stock to flow model. This was created by at 100 trillion USD on Twitter, so make sure you go give him a follow if you want to see some really awesome charts that a lot of people really can't compare to. I mean, you have these analysts like me and like other people, and like we might really have these really good ideas about what can happen with price, but this is an actual indicator that follows Bitcoin's price up to a 95% accuracy. And I actually just made a video talking about this on my channel. It's called The Indicator to Make Millions or something along those lines. You can go check it out, and I actually talk a little bit about this. But this is a chart that I've been watching for, and this is actually exactly how I'm structuring my Bitcoin investment portfolio. I think that Bitcoin's going to continue to follow this trend as drawn by the Bitcoin stock to flow model. And up to this point, it has actually followed this trend to a 95% accuracy. Now, we can see here that we have this color scheme. Now, the darker, more depressing colors, blue, aquamarine to green, those are the best times to be buying because that shows when the market is generally oversold. And then towards the other side, you have the yellow, orange, and red. That's when you want to be selling. Now, anytime price spikes below this Bitcoin stock to flow model indicated by this little gray line, that's when you start to get these darker colors, and whenever it spikes above is when you start to get these other red colors. Now anytime it's kind of just riding that line, it's usually stuck here in the middle. But this shows you kind of when you could be looking to sell based off of the stock to flow model and where it would be a great time to be buying at. Now, I wanted to share this with you guys because it's really important because, like I said, this is exactly how I'm structuring my long-term portfolio inside of Bitcoin. My long-term investments, the Bitcoin that I'm going to hold for the long term, is all going to be comprised based off of this chart. Now, looking at this, we can see here that price temporarily spikes above this and we temporarily kind of close below this stock to flow, but we continue to average out on this big picture trend. Now, this is interesting because this shows a price target for Bitcoin at $100,000 before 2021. About mid-2020 is when we should expect to see $100,000 Bitcoin. Now, with that being said, based off of the last cycles, we always spike above this linear growth, this stock to flow model. We always spike above that for the short term, and that's really the bubble mania phases. And so if this is predicting a $100,000 price target, I think that it's realistic to say that we could hit about $200,000, and that's actually my price target moving forward inside of Bitcoin. That's really the target in which I'm going to be looking to scale out all of my Bitcoin portfolio for the short term, mid-term, and then I will keep my long-term bags for the consistency of this trend. But overall, my target is 200K Bitcoin. And I think that we're going to hit that level in this next cycle. And based off the stock to flow model, this shows us at about $100,000. But every single cycle previously, we've peaked above that target price. And so that's what I'm going to be watching out for. Now, we could still peak well above that target price for the short term. But overall, I don't expect it to go too much higher than that $100,000 threshold, which is why I'm targeting 200K. I think that that's very realistic. And so that's what I'm going to be watching out for. Now, with that being said, guys, the interesting thing about this chart is this shows Bitcoin's price at $1 million per Bitcoin at about mid-2024. About the first or second quarter of 2024, Bitcoin's price is going to be $1 million. Now, this takes me back to my chart. The fact that there are a lot of analysts calling for this kind of multi-year bear market where we could potentially see, Bitcoin's price rally. We go up to that 200K mark, and then from here, we start a long correction all the way back down. And we actually kind of just consolidate here for a long time. And then we could be, something like this. And there's actually a lot of analysts that are talking about this, where we have this is the big blow off top. This is the final stage where all of the institutional money comes in. And then we start retracing from that point, and that's what starts the multi-year bear market. And there's actually a lot of people that are kind of calling for this to happen. But the only reason why I would have to disagree with that is based off of this one analytic alone, this indicator, the stock to flow model. Now, up to this point, this has followed Bitcoin's price to a 95% accuracy. At the end of the day, the analysts that are calling for this multi-year bear market are only basing it upon their own opinions, whereas the Bitcoin stock to flow model is basing it based off of the mathematic sequence of stock to flow inside of Bitcoin. And so it's for those reasons that I actually trust the mathematics behind this equation far, far greater than what just some analyst has to say about the overall market. And that's why I'm going to continue to follow and base my long-term investments off of this graph and off of this indicator. Now, it's interesting because if we had a multi-year bear market, this is really the last impulse before, this is the last impulse that we're going to make life-changing moves. At this point, if this ended up in the multi-year bear market and we went all the way out to 25 to 2025, somewhere like around there, then we'd start to see a very slow increase over time. And it would behave more like a stock. And it'd be, 2030 before we even got close to breaking that all-time high mark. And so I don't really think that this is going to happen based off of the supply shock that happens every halvening. And really every halvening has happened, and I'll show you guys kind of how it lines up. First halvening was about right here. Second halvening was right here. And now our third halvening is going to be May 25th, 2020. And so we're getting very close to that third halvening. Now, based off of this, I think that we'll kind of see this short-term consolidation, and we might start breaking back up closer towards this all-time high up to the point of that next halvening. But this halvening is really what drives the big parabolic run inside of Bitcoin. Now, I think that these halvenings happening every 4 years, the next halvening will happen, 4 years down the line, somewhere in 2024, somewhere right around there would be the next halvening after that. And so, to me, guys, it makes more sense that we're going to continue to follow this trend inside of Bitcoin and this stock to flow model than anything else. I trust this a lot more than anything else, which is why I'm actually structuring my long-term positions based off of this indicator. And so this is what I had to share with you. I wanted to talk to you guys about some updated thoughts with Bitcoin, both in the short term, mid-term, and the long term. I think that it's really important that we understand what can happen from a cyclical time frame perspective. We can see here that the linear chart of Bitcoin, the parabolic runs are getting less significant. The time in between the parabolic runs is getting longer, and then the ROI between each cycle from bottom to top is getting smaller. And so I want to talk to you guys about kind of some thoughts that I've been thinking with this, how I'm structuring my long-term bags with Bitcoin, how I'm kind of looking at the current market cycle and what I think that we could see potentially moving forward. And this is really the best way that I've gathered to fully get a great understanding of what could happen with the rest of the market. Now, I've talked about a lot of altcoins recently, but today I wanted to talk about Bitcoin because Bitcoin is the driver. I haven't made one of these linear charts for a while, and so I figured now would be an excellent time for me to do so. Anyways, guys, thank you so much for the support. If you haven't already, click that subscribe button, hit the notification bell so you don't miss any more updates like the one provided for you here. Remember, my course is 50% off until the new year, so you got less than 2 weeks to jump on that great deal and offer before the new year starts. Prices are going to double for that, so that you guys are really going to want to jump in there now, get some of my sound advice inside of my Discord while you can, and while the opportunity is still golden, while markets are really cheap, because that's where you're going to make the bulk of your money. Anyways, guys, thank you so much. I will catch you in the next update. As always, peace out.